getting cold, you're needing a shoulder. Puff out your chest and be a little bolder. All we do is we buy and hold. There will be shills who wanna steal your thrills. There will be friends who hold till the end. There will be doubt, fear and cloud, but it's all in your head. Those hedges are dead. Panic and fear really are near, but it's not ours to own. We have shown that all we do is buy and hold. Oh, there will be shills who wanna steal your thrills, and there will be friends who hold till the end, and there will be doubt, fear and cloud, but it's all in your head. Those hedges are dead. So when the night's getting colder and you're needing that shoulder, these apes got your back, we got each other. All we do is we buy and hold.
T-minus 90 seconds and counting. All systems are go. We're about 90 seconds from the launch of Space Shuttle Discovery.
Go for launch, GC. Go. Got it. Go. Fido. Go. Bravo. Go. GC. Go. Max. Go. Eagle. Go. Eco. Go. DeFeo. Go. Payloads. Go. Scan for the customer. Go. DPS. We're go. Eco. Go. Booster. Go. Surgeon. Go. PRS. Go. Okay. And let's see what we got GNC.
T-minus 60 seconds and counting. We are transferring to orbiter internal power at this time. Discovery is now running off its 3 onboard fuel cells. Coming up on a go for auto sequence start.
MC, I hear you loud and clear. 5 mics. Tell me. Have you loud and clear as well? Thanks, sir.
Go for auto sequence start.
And we have a go for auto sequence start. Discovery's onboard computers have primary control of all the vehicle's critical functions. T-minus 17 seconds and counting. 15, 12, 11, 10, 9, 8, 7, 6, start, 2, 1, booster ignition, and liftoff of the Space Shuttle Discovery, returning to the space station, paving the way for future missions beyond.
Guidance now converging. Discovery's onboard computers commanding the main engine nozzles to swivel, aiming the shuttle for its precise target in space for main engine cutoff.
Should have a good forward link now in SM. Okay, you sound good.
return.
Copy, negative return.
It's oh so quiet. Shh, shh. It's oh so still. Shh, shh. You're all alone. Shh, shh. And so peaceful until you fall in love. Simple, the sky up above. Simple is caving in. Wow, wow. You never been so nuts about a guy you wanna love. You wanna cry, you cross your heart and hope to die till it's over, and then shh, shh. It's nice and quiet. Shh, shh. But soon again, shh, shh. Starts another big riot. You blow a fuse. Simple, the devil cuts loose. Simple, so what's the use? Wow, wow, of falling in love. It's oh so quiet. It's oh so still. You're all alone, and so peaceful until you ring that bell. Big bell. You shout and you yell. How you broke the spell. This is where you almost have a fit. This guy is coach and I got hit. There's no mistake. This is it. Till it's over, and then it's nice and quiet. Shh, shh. But soon again, shh, shh. Starts another big riot. You blow a fuse. Simple, the devil cuts loose. Simple, so what's the use? Wow, wow, of falling in love. The sky keeps in, the devil cuts loose. You blow, 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 blow your fuse. When you fall in love.
Good morning, you filthy apes. Welcome to AMC with KC, where we buy, we hold, and we screw those hedgies. Screw them! That's right. This is where we like to fling poo and eat crowns for breakfast. Rock strong. Good morning, guys. The title for the day today, SPVXEP. What is it? LMNOP. What is it trying to say? So first off, I don't really have answers for you this morning. Those question marks that are in the title for the day today are because I still have questions. I don't even really fully understand what it is that I'm looking at here, and I'm trying to get a good grasp on it because I don't like talking about something that I don't understand. But I need to talk about it because there's something important going on here, and it's something that I think the more eyes we get on it, the better it is that we can figure out what's happening.
So let's take a look at it real fast here. There's something important going on here. This is related to the VIX. And we've been seeing that the VIX has been separating the gap between the futures and the actual VIX reported value. So actually, let's look at that first real quick here, since we're talking about differences in values. The VIX is currently showing at 1539. The futures right now, and this is short-term futures, the short-term futures are suggesting 1815. And I mentioned to you that we're probably going to see the futures on the VIX jumping up some morning when market opens. I don't know when. There's no way for me to be able to look at that and sit there and tell you like, oh yeah, I see this is going to happen today. I just don't know when that's going to happen. But the short-term futures are suggesting more volatility, not less. And yet we see the VIX separating itself from the futures currently. Now there might be a little bit of a clue here somewhere, and I think I may have accidentally stumbled upon it last night. And I've been trying to figure out exactly what it is that I've stumbled upon, and I think that it's very, very important. And like I said, the more eyes we get on this, better. So again, this is the SPVXEP. Now I'm just going to read to you a little bit about some of the different things that I have pulled up on this in my research so far. Let me see here. I guess I'll start off with talking about what it is. The S&P 500 VIX Futures Enhanced Roll Index ER is what this is. It's a financial index designed to provide exposure to the S&P 500 VIX Short-Term Futures Index with an enhanced roll strategy. Here are some of the key details. The purpose. The index aims to measure the return from a daily rolling long position in the first and second month of the VIX futures contracts. Now, normally the VIX takes a look at is only looking at the next 30 days, just the VIX alone. But we're talking about the short-term positions, and so that looks at month 1 and month 2. It's designed to mitigate the negative impact of contagio, and I'm going like I haven't heard of this before. By the way, this is a big new word for me. We'll talk about that here in just a second. But contagio, which is when future prices are higher than the spot price by rolling more frequently. So of course I had to be like, I had to look that up. I was like, what the hell is contagio? Contagio. It's a market condition where future prices of a commodity is higher than its current spot price. Here's a simple explanation. The spot price, this is the price where you would pay to buy the commodity right now. So if you were to, for example, like look at gold or something like that, and you'd say like, what is gold's spot price right this second? That's what that is. Futures prices, this is the price that's agreed upon today for commodity to be delivered at a future date. In a contango situation, the future price is higher than the spot price. This often happens because of factors like storage costs, insurance, and expectations of higher prices in the future. For example, if you expect the price of oil to be higher in 6 months, you might be willing to pay more for future contracts, a futures contract now than the current spot price. Contagio happens due to things like I said, carrying cost, bullish sentiment, inflation, supply and demand dynamics. As an example, imagine you want to buy oil. The spot price today is $50 per barrel, but the futures price for delivery is in 6 months is $55 per barrel. This $5 difference is due to contagio, reflecting the costs and expectations mentioned above. All right, so I read that. Let me move back to another spot here because we got to keep on moving on, talking about what is this SPV XEP and what are you seeing. Let's see here. So what is the purpose? I read that off. What are the components? It includes the VIX future contracts, which are based on the CBOE Volatility Index, the VIX, often referred to as the fear gauge in the market. And this is where I'm going to go to white paper and read from a white paper specifically about what some of that means. Give me 1 second here to go to the white paper. I guess I copy and pasted this so you guys could see this as well. S&P 500 VIX Futures Enhanced Roll Indices. The S&P 500 VIX Futures Enhanced Roll Index dynamically switches between two long portfolios of VIX futures. The short-term portfolio, which is represented by the S&P 500 VIX Short-Term Futures Index, and a mid-term portfolio, which is illustrated below, and they go through a big, huge, long process of identifying like what the midterm portfolio encompasses, and it's filled with lots and lots of math and stuff that'll make your head spin. But let's just talk about the short-term portfolio for right now. The short-term portfolio assumes a long position in the S&P 500 VIX short-term futures index, which models a rolling long position in the first and second month VIX futures contracts. It rolls continuously throughout each month from the first month VIX futures contract into the second month VIX futures contract. On any business day, the excess return of short-term portfolio is calculated as illustrated in the S&P 500 VIX futures index methodology document. The midterm portfolio assumes a rolling long position in the third, fourth, and fifth month VIX futures. Now, I've read in other places, not just this white paper, but I've read other places that goes as far out as 7 months as well. So I'm not sure. That's one thing I'm still looking into. It looks into those third, fourth, and fifth VIX futures contracts. It rolls continuously throughout each month from the third month contract to the fifth month contract while maintaining positions in the fourth month contracts. Right? So much. What the hell, Casey? Why are you bringing this to our attention? Like, what the hell? This is like way too much information. I get it. I understand. I fully understand. But there's something important going on here. And this is, I think, where I should probably get to the important part here, because I need to show you what's happening. Because it won't make sense to you if I just keep throwing really crummy information that doesn't help you understand that something happened with this forward-looking indicator. It was trading as of, and I'm on a daily chart right now, it was trading down here in like the 1.5 range forever. I'll show you how far forever is. But it suddenly jumped on 9/16 up to 17. It actually opened up at 16,812. 16,812. I'm not just talking about like some kind of minuscule little jump. I'm not talking about a glitch. I am talking about it full on jumped up to 16.8 thousand as a value. Looking at these forward-looking indicators. And it's been trading there and fluctuating very steadily around that amount for the last 7 trading days. Up until the 9/24. Now, the dynamic part of this is that this indicator, this has been trading on the marketplace since 2017. And we can go back and we can see what it's done in the past. I'm going to go to a weekly chart. This is a weekly chart. This is COVID. Right here. This is COVID. Let me zoom in on COVID just a little bit for you. Let me zoom on so you can see how much it jumped up by for COVID. That's COVID. That's COVID. 24.92. That's COVID. This is what this chart's been looking like since 2017. Started in around October 2017. This is now. Some shit's going down, guys. Some shit is going down. And I say that, but this is really, this is like, I don't know. I mean, look, COVID got to 24. COVID got to 24. We went through COVID period of time in 2024 and got a 2020, and we got a 24 value. This is 17,152. No joke. Like, it's literally trading in this range every day. If you think the market went up in 2020, hang to, or hung to, if you think the market went, I don't know, man. I don't know. I don't know. We're dealing with stuff that we have never seen before. We have never seen this. RSI went to 99.48 on this. I mean, if we scroll back here a little bit and we see, okay, well, what's the leading, when was the leading factor for 2020? Like, how far out was the market to having like an absolute collapse? And we could overlay this perhaps maybe with like something like, the SPX to kind of find out like how forward looking this was to the market. We could look at the weekly chart here and say, okay, well, I would suggest to you that this was kind of signaling in February of 2020, but that was right around the time when everything was already blowing up, I feel like, in the marketplace in 2020. So I don't know. I mean, okay, let's just write this down. Let's write down February 28th is what it's showing here, kind of in that time frame. Is when it started moving for COVID. So we'll go back to like SPX and we'll just take a look at the SPX on, I'm going to put down 22/28/2020 on my board here. And then we'll just switch over to the SPX real quick. And we'll just take a look at that real fast and see what happened during that same time frame. Right? I guess that's probably the fairest way to do that. What did I say? 2/20/2020, 2/28. Right there. Same candle. Same candle. That's the same candle right there. All right, let me continue to read for a second. I'll put this on a daily. I'll keep this on a weekly chart back on this, so you can see it. I think it's crazy how far out I have to like zoom just to see some of the data points that are showing up now. More current data points. There it is. Let me keep reading just for a second because I think there's a little bit more information here that I'm going to throw at you before, I already threw the shocker at you. You got the Shaka Khan, and now you're going like, okay, well, what next? And I don't know. I really don't know. But let's see here. It says I guess the next thing I'm going to read to you here is about the rolling contracts. This particular index fund doesn't just hold one set of VIX futures. Instead, it rolls them. This means it regularly sells the futures that are about to expire and buys new ones that expire later. This helps the index stay focused on near-term future. Enhanced roll strategy. The enhanced roll, so remember that the title of this is Enhanced Roll Index ER. And it says here the enhanced roll part means that the index tries to minimize the costs associated with rolling futures. So that's really kind of an important thing to kind of know here. The enhanced roll portion of this basically sounds to me like this is maybe a little bit of a way to maybe control some of the volatility in the marketplace by rolling futures into something like this. I'm not sure, but It does this by rolling more frequently and in a way that reduces the negative impact of contagio, right? We talked about contagio. What is that? It's talking about when the futures are expected to be way more pricey than what they're currently at. There's some kind of major difference between what the futures are suggesting we're going to see versus where we're currently at. And so this enhanced roll strategy is an attempt. It looks like, or seems like, at least to me, it's an attempt to try and maybe mitigate some of that difference. It says here every day the index calculates its value based on the prices of the VIX futures it holds. If the market expects more volatility, the value of these futures goes up, and so does the index. And then I read to you what contagio is, and I guess maybe the last part here is midterm VIX futures can offer insights into, and this is the midterm portion of it. Remember, there's two portions here. There's a short term and a midterm. Midterm VIX futures can offer insights into how investors expect volatility to evolve over a longer horizon. If midterm futures are significantly higher than short-term futures, it suggests that investors anticipate prolonged volatility. Some investors use a combination of short-term and mid-term VIX futures to hedge against different time frames of market risk. This can influence the pricing and demand for both sets of contracts. Contagio and backwardation, probably a new word for you as well. The relationship between short-term and mid-term futures can indicate whether the market is in contagio, future prices higher than spot prices, or backwardation, where the future prices are lower than the spot prices. This affects the roll yield and overall performance of indexes like this SPVXEP. Roll strategy on this, while the SPVXEP focuses on short-term futures, the roll strategy might be influenced by the broader VIX futures curve, including midterm expirations. This helps in managing the costs associated with rolling future contracts. Volatility expectations. Midterm futures provide a broader picture of volatility expectations, which can indirectly impact the pricing and strategy of short-term futures use. So how do I summarize this? In my own words, I would summarize this as the market's looking at longer periods of time of volatility. Probably, if you were to say 5 months out from now, would be February. It's looking at volatility incoming from the future 6 or 5 months out, February, and comparing that to short-term 1 to 2 months out, and suggesting that there's a massive difference in what the volatility is looking like between those two periods of time. And it's showing up as a direct reflection in this contagio setup that we're seeing right now, where there's this big, huge difference, so big of a difference that the market can't even hide it anymore. It's glaring you in the face, and it's saying like there is going to be a massive difference between the next 2 months and 5 months from now. Grove says, I can't find a link to this stock, and it's an index, so it's not a stock. It's an index fund. But it's something that I think that we need to pay attention to. I did reach out to one person so far this morning to maybe get a little bit of a look at this. I reached out to what is his name again? Jack Gamble. Nobody Special. Sent it to him. Sent it to one of my other friends that I know, and maybe we'll get some results back and find out what they think about it. It's certainly, I think, really important to get more eyes on it, if possible, because I think that there's something going on here. This is not just a glitch, especially when it's been reporting for 7 trading days so far, and we're going on 8 at the same value. It's not a stock, again, Grove. It's an index. All right, numbers. Yeah, when this goes up, the market goes down. Yep. All right, I noticed my Some of my sounds aren't working here real quick. Give me just 1 second. I want to fix this real fast. Can I fix it? Maybe I can. Morning, hon. Oops, that's not what I wanted. Give me 1 second. Well, that's weak sauce. There she goes. All right, well, we finally got the engine working. I did all that reading without even putting on my glasses this morning. Can you believe that? What the heck? I gotta hurry through these numbers because then I got almost like price predictions afterwards. So we already went through the numbers last night and kind of talked about them a little bit as far as price predictions, and I already awarded the points. Nobody nailed the price prediction. In fact, many of us were off by quite a bit. And as a result, right now, if you remember when we first started taking a look at how much we were off by on our price predictions, my very first week, I was off by 36 cents in the weakest link in the group, and as a result, I was off by 36 cents for the week. Well, guess what? Every single one of us, except for me, every single one of us, including me, have surpassed that 36-cent range for this week already after just 2 days of trading. I'm currently sitting at 37 cents over. Nana's or Apex in second place with 40 cents over, and then tied for third, Nana and Tech have 48 cents over on their price predictions. So we'll take a look at what the numbers are looking like today here, and we'll get some new price predictions going in for the day. Hopefully we can do better for the rest of this week. And I think these glasses are clean. Two-factor authentication, if you don't have it, you may want to consider getting it, as it could prevent somebody from getting into your account that shouldn't be in your account. If you sign up for that and your broker allows you to put in a secondary device to be able to receive that access code, you might want to set that up, as you never know when somebody's going to, or when something's going to happen to your primary device. Last but not least, make sure you guys are getting statements for your portfolios. I know you know what it is that you hold, but you need to know how much of it that you hold is at a future date. There may be a time where you cannot contact your broker. Total amount of volume for the day yesterday traded. It was kind of an interesting day yesterday. I kind of would have expected maybe a little bit more volume than we had, because I gave you a 10 to 30 million share traded day, and we only got 11.7, which is it was about 200, just maybe 300,000 shares less than what we had the previous day on Monday. So it was a little unexpectedly low, considering how much pre-market volume we had. This morning, in total, we had 26,000 shares in pre-market volume, including our pokey stick of volume. So I'm going to have to move back down to that 1 to 20 million shares traded for the day, unfortunately, because we are not looking like a ton of pre-market volume. As a result, our short exempt volume should be pretty low. Let's check and see what it is. Short exempt volume came in, though, much higher than anticipated. 175,000 shares in short exempt volume yesterday. It just really isn't making a whole lot of sense anymore. We were down 3% exactly. And utilization, let's see how much that changed by, because we did see a bunch of borrowing going on yesterday. Utilization coming in at 53.87%. So just smidgen higher. Max pain. By the end of yesterday's normal trading day, I kind of felt like we didn't really see much change on max pain. So I don't expect to see that change for AMC. I think it's going to stay at $5. Oh, no data. Website's down. GME. Let's see if GME's got some data here. Maybe. Nope, no data. Oh, screw Max Payne. All right, exchange traded volume. We talked about this last night. We saw less volume going through those exchanges than we normally would, and so we could have potentially seen an even worse price amount going down yesterday, except for the fact that the market controlled it to get it right where it wanted it, and so as a result, we saw less volume going through those exchanges. CHX by the end of the day yesterday was 4,886 shares. Total amount of shares loaned out on GME since yesterday. By the way, the total amount of CHX volume on GME was coming in at 11,331 shares. Let's take a look and see what we have borrowed since yesterday at 2045. 150, 350, 450,000 shares so far borrowed since 2045 yesterday. With 1 million shares available to borrow, fees are at 0.42 and rebates at 4.41. AMC, since 2045 yesterday, has had approximately, well, this is odd. They did an odd amount of borrowing going on here. That's really strange. 150,000 shares so far. With 300,000 shares available to borrow, fees at 1.27%, rebates at 3.56. Moving on, institutional ownership this morning on AMC, or last night actually, because I updated it last night, was 121.504 million. This morning it's coming in at 121.394. So a little bit down. And on GME, it was last night it was reported at 103.360. Now currently at 103.360, so no change since last night. Let me take you guys over the other page here. We'll move a couple screens around and take a look at the rest of the data. All right. Starting with AMC, the total amount of open interest yesterday was at a $5 strike with 30.7 thousand contracts in volume. It's now 31.5 thousand contracts in volume, so that's going up. The highest amount of put volume yesterday was at a $5 strike with 8.1 thousand contracts. There's now 7.7 at 5. Which means that the market is increasing the amount or decreasing the amount of puts that it has open at $5. So some of the $5 puts are closing, but we are also seeing the 4.5s increasing as we're getting exceptionally close to 4.5. Closing of puts will be a bullish signal and should send the price shooting back up again. If we see that happening, watch for larger quantities of volume to show up at 4.5 and 5. Moving down the page here, we'll just document real quickly here the option contracts open for the next 2 weeks out. On GME this morning, the highest amount of open interest closest to where the price closed yesterday, which was 22.63, is showing up on the call side at 22 with 13.9 thousand contracts. On the put side, the highest amount of volume. I mean, it's difficult to say. I could say 21. I could also say 20. 21's closer to where the price is being traded at than 20 is. So I don't know. I guess I should say 21. There's quite a few though at 20. max pain yesterday was 2150. I think. No, I think it was 2050. 2050 was max pain yesterday. I would assume that it's got to be at least 21 now. Let's see here. It looks to me like the market on the call side is targeting 22, and on the put side 20. So like 21. So the market's kind of targeting like a 21 price, but it's at 22.63, which means the strike price is three strike prices higher than where the market's targeting as of right now. Ortex, let's take a look and see what we got going on here. Days to cover is absolutely just launching up here. On AMC, it's at, this is for loans, 3-month loan period. It's at 6.54. Back here, it was at 6.21. It is absolutely shooting up here. Utilization, day over day, slightly increasing from 53.66 to 53.87. The on loan amount yesterday increasing from 85.58 million shares on loan to 91.14. Let's see here. Yeah, I'm just gonna get a calculator out for this. 91.14. I'm not up to calculating this morning. Let's see here. 85.58. 5.56 million shares newly loaned out yesterday. It was 16.08 yesterday. So we're still getting large quantities of loan shares coming out. Let's see here. The total amount of shares estimated in new short interest, according to Ortex, is coming in at a value of an increase from 53.07 million shares to 55.31. So 2.24 million new shares in short interest. That's actually much higher than what they would normally put in. I feel like it's that's kind of a big number. Is that right? 3, 4, 5. Yeah. Interesting. Well, that's going to raise the estimated short interest of the free float quite a bit, as you can see, from 50 or 15.8% to 16.47. The on loan average age per day is obviously going to be coming down. That may not, just in just a couple days, that even that many loan shares may not cause us to continue to drop. I'm seeing this. Okay, here we go. On loan average age per day should be dropping. Went from 32.27 days to 30.66 days. Security lending volume slightly less. Went from 20.57 million shares to 15.4. GameStop. Utilization coming down on GameStop from 36.85% down to 32.59. That usually means shares have been returned. Let's see if that's the case. Yep, a few shares returned. It went from 56.52 million shares down to 53.08. So we're looking at about 3.5 or so million shares returned. That's going to drop the estimated short share interest of the free float from 10.88 to 10.58. The on loan average age per day will probably rise as a result because there were probably newer positions that were closed out. And it did. It went from 28.6 days to 31.19. Security lending volume severely less than what it was prior day, from 23.96 million shares to 12.18. SSR trigger price for the day is coming in at 407 on AMC. No options data available for me to read off. GME's trigger price $20.37. Again, no options data for me to read off here. Oh, no, that's not true. There is options data. 94,000 contracts are out of the money on the calls versus 40.7 thousand contracts that are in the money. 28.8 thousand contracts are out of the money on the puts versus 2,000 contracts that are in the money. Do realize that 40,000 contracts in the money for this week. That is this week. That's more contracts than it was back in May when DFE first leaned forward. It was like 37,000 contracts that were in the money when he first leaned forward. May 3rd. It was May 3rd. May the 4th be with you. I feel like Porky the Pig when I said, may the 4th be with you. Orders by Fidelity customers, AMC and GME are the only two I'm looking for on this list by the end of the day. And I think we took a look at it last night and did not see AMC or GME on there, so no reason to see it this morning. And they are not on there. MMRI yesterday when we closed out the day was 232.64. It is now 234.53, so a little bit of an increase. A little bit more risk. The spread between the 2-year and 10-year bond yields. We have the 10-year at 3.756 and the 2-year at 3.531 for a spread of 0.225. Yesterday we finished out the day, it was 0.192. So this is an obvious increase in the spread overnight. We started out the week at 0.179, so we're definitely seeing the 2-year and the 10-year getting further and further apart. The conditions for a recession, probably hyperinflation if I had to guess, have already been met with decreasing yields followed by a normalization of the 2-year and 10-year bond yields, and that has all happened. VIX futures up 0.54. It's showing 18.15, and when yesterday it closed at 15.39. So I'm expecting a future leap in the VIX. We are getting close to the end of a month. That may be a very significant period of time, and believe it or not, that does happen to match up with a period of time that's coming up in here. You can see that this is the looking explosion and a sick face all lines up on October 1st, followed by an end of a cycle, a thumbs up, a beginning of a new cycle, and a starry eyes. We're getting very, very close to a potential event occurrence, according to the timeline. The Nikkei last night was up 0.82, Hang Seng down 2.26, and taking a little bit of a pullback from the big move it had the other day. Nifty 50 is currently up 0.19. We are seeing the markets down anywhere from 0.01 to 0.09 this morning. Not big, huge moves. Not yet, at least. Of the Mag 7 this morning, 3 out of the 7 are up in the pre-market. Financial institutions that have changed more than 2.5% since yesterday's closing will get a shout out. As I feel that would be a big move, especially for the pre-market. Let's see if we've got anything. Nothing there. Gold is currently up 0.06 and consolidating a little bit after an uptrend. Silver is down 1.11 and is breaking an uptrend into a downtrend. Ethereum Classic is down 1.42, trending up from a downtrend. The US dollar is down 0.03, appears to be moving into a downtrend after having consolidated after an uptrend. Up, consolidation down. Oil is up in the pre-market 1.42. Usually the market likes to follow oil. But the pre-market of the SPY it is trending up actually. The SPY is trending up in the pre-market this morning. It gapped down initially at pre-market open, consolidated for a little bit, and then started trending up. Tesla is down in the pre-market 0.55, trending up after a gap down at pre-market open. Amazon is up 0.03, gap down in the pre-market, is trending up. Cinemark is breaking even this morning, only trading 131 shares so far, but I would say the trend has been up, and it's kind of still continuing that trend so far. Doge is down 1.15, trending up. Bitcoin is down 1.26, consolidating after a downtrend. GME is down 1.55, but trending up. HYMC is up 1.5, trending up. NCMI is breaking even. It's traded one share so far. It's breaking even right now. I'm going to call it consolidation after an uptrend from yesterday. Hood is down 0.18. Gap down in the pre-market, trending up ever since, kind of consolidating back from where it closed at. And AMC is up 0.44 and consolidating pretty much for the most part from yesterday's closing price, just underneath the Fibonacci retracement at 454. Inflow versus outflow. Yesterday we had approximately $2.4 million more outflow than inflow. 77,000 shares traded so far this morning. We've had a very, very low pokey stick of volume with only like 26,000 shares traded up to that point. And that would be 7 my time, 8 o'clock Eastern. And the volume prediction for the day can't be any more than 1 to 20 million based on those numbers. On a 4-hour chart, we have more selling pressure than buying pressure with an RSI of 31.49, which is below average. On a 1-hour chart, more buying pressure than selling pressure with an RSI of 33.14, which is below average. On a 30-minute chart, more buying pressure than selling pressure with divergence on the vortex indicator happening within the last hour. RSI is at 32.14, which is below average. And on a 5-minute time interval, more selling pressure than buying pressure with an RSI of 38.7, which is below average. Now, I'm kind of fully expecting to see a drop below 450 from market open to close probably as many put positions as possible at 450 before the end of the week is over. Wednesday seems like a good day to do that by. So kind of expect to see that happening. And let's take a look at Ichimoto. Lagging line on Ichimoto on a 1-hour chart is below price line, conversions below base. In order for us to see a price moving up through a cloud for the day-to-day, we would have to see 475 or better. Would that get the lagging line above price line? Pretty much. So I think 475 is the number I'm going to write down for the day-to-day. It was 485 yesterday. So it's dropped down 10 cents. 505, I think, is the number I had written down for the 4-hour for yesterday. Today, the lagging line would have to get up above price line, which is going to be at 489. We'll just call it 490. 490 would put price above the cloud and would probably get the conversion to cross the base, but that's going to be a big, big move for us in a single day. So 490 is the number. The 1-hour and 4-hour are not in agreement at this point in time. But those are the key target points for those two time intervals, 475 and 490. And with that, I think that's all I got for you guys. Let me head over to the back of the big trap. Let me see here.
Smells like death in the garage.
It smells like death.
Yes.
It's that chicken. It's the chicken we had. She came out of the garage and said it smells like death in there. Oh man. So it's you thought I had a doozy this morning, but you've got some kind of information that's pretty cool too. Good morning, UPS delivery guy. What you posted under the tinfoil hat section was very. Where did you get those from? Is that something you made?
I went last night. I was trying to find the Freedom video,
Mm-hmm.
and so I was watching everything last night, and when I got to the Shawshank video, I saw all these memes. So I just said, I'm just going to screenshot and see if I can see what they say. And I just screenshotted them and posted them in tinfoil. Like each time a new meme popped up, I would screenshot it and then post it.
At some point, do you put your own message on the screen? Or is that all just
Yes.
screenshots?
I put in like notice when he talks about his sister, like the top left memes changed. I wrote that.
Oh, yeah.
Like, but I didn't write anything on any of the pictures or the memes.
Yeah, let me put this up